Hey, what's up, you guys? Danny Batsalkin here. Thanks for tuning in to another episode. I'm so excited today to have my friend, co-founder and COO of Gerber Kawasaki. We have Danilo Kawasaki on the show. He's a financial planner, wealth manager. Danilo, welcome, and thanks so much for being here.
Thanks for inviting me, Danny. It's been a long time.
It has, and I think there's no better time really to have you on the show than right now because there's some interesting stuff going on, right?
To say the least, yes, absolutely.
Yeah, so Danilo, let's just dive right in. I know our guests are really wanting to hear all about you, but I want to give them some really good stuff about kind of what's happening, and then we'll get into your background a little bit more. And so, given kind of what's happened with coronavirus and COVID-19, and the markets kind of taking an interesting turn, I just wanted to kind of get your thoughts on what's occurred and what's gone on, and just to tell us kind of how things are going over there at Gerber Kawasaki.
Sure. It's really unfortunate the situation that we're in, and my heart goes out to everyone impacted by this pandemic, whether directly or indirectly. It started obviously in China. We have some good sources in China that alerted us to the magnitude of this pandemic. At Gerber Kawasaki, we were very fortunate. In January, we took some steps to protect our portfolios. We sold some of our equities. We had a phenomenal year in 2019, so we wanted to protect some of those gains. So we kind of sold off a few things towards the end of January. And then in February, the virus kind of started to spread here in the US, mostly on the East Coast. And we decided to take some more profits off the table, and just in anticipation of something similar to China. How the pandemic kind of spread it in China and everything got shut down, and then we kind of saw a similar pattern happening here, and trying to flattening the curve and all that good stuff. So, we go to March, and all wheels fell off, basically. Fear and panic took over in the markets, and we saw the fastest decline from peak to bear market in modern history. Basically, 38% slide from top to the lowest point that the market had gotten towards mid to end of March.
Hey there, are you enjoying this interview? If you are, hit that like button, subscribe to the channel, and hit the bell icon to get notified about all of our videos so you don't miss anything. All right, let's get back to the interview.
And at that point, we had some cash. We decided, let's go in a shopping spree. Let's buy some companies that we like, that are obviously cheaper. And obviously, everything I talk about is with a long-term horizon in mind. We're not traders, we're long-term investors. So, we made some key moves in the middle of March that helped us get to where we are today. The market's still down for the year. The market is down about 10-11% on the year. Our average account is about even. So we're very, very happy with our results. It hasn't been easy. It's been a stressful time. But, that's where we are today.
Oh, Danilo, thanks for that, that kind of background. And, by the way, congratulations on, what you guys did, because it sounds like you guys were out, ahead of it with your insider information from China.
Yes. Yeah. Well, insider from public sources. And,
Right.
It's interesting to digest Chinese information. We kind of have a saying at our firm. Whatever we hear from China, you either divide by 6 or multiply by 6. So, I actually, one of my best friends leaving China, he's one of the top guys at VW, at Volkswagen. Right intertwined with the heart of the economy. And he gave me some great information of what was happening there, shutting down the factories. And when they start opening up, the people who were allowed back in, and the precautions that they were taking, taking everyone's temperature before they the work or coming to work, obviously wearing masks. So, it's just a small sample, but it kind of gave us a good idea what's happening out there.
It's like, Danilo, when I asked my dad, I'm like, hey, what's going on with coronavirus in Russia? And he's like, oh no, there's no virus in Russia. It didn't go there.
It
Same
did,
kind of
yeah.
same kind of sources in China and in Russia with respect to information.
Yeah. Yeah.
So Danilo, you've given us kind of the background in this last month, and again, I mean, I think that's amazing what you were able to do for your clients. So now let's kind of talk about what you think. I know the market's recovered somewhat. What are your thoughts on kind of going forward as far as what people should be doing with wealth management and investing and stuff like that as we maybe start to come out of this?
Sure. To be very honest, Danny, I think the market's got a little ahead of itself right now. We talked about this severe decline we saw in March. And then conversely, we saw this pretty fast recovery, 25% from the low point in, I don't know, maybe 3-4 weeks. So that's also kind of abnormal in a way, not very healthy, this wild swings.
Mm-hmm.
So, we kind of feel like the markets are a little ahead of itself. Obviously, it's being driven by the optimism that, the economy is going to open up again. But again, frankly, we only really know what's going to happen when we have some sort of vaccine, treatment, cure, right? We can open up the economy and people can start getting sick again, and then we have to shut it down again. So that doesn't really, nobody knows, right? So that's kind of our take in the, next 2-3 months. It's really a question mark what's going to happen. I think it's going to be very company and industry specific. Certain companies, certain sectors of the economy will continue to do well and thrive. Other sectors are going to get hit hard. The obvious ones are tourism and hospitality industry, restaurants. Big. I have one of my best friends owns concert venues. He is done. I mean, there's nothing going on, and he's basically prepared to not make a dime for the rest of the year. Because theme parks, it's going to be tough for places that attract large crowds to just open up and people to have the confidence to go to the events. So our outlook for the next few months is really hard to say. We can't forget that we're in an election year, so we have that, add that to the mix. But what we are confident is looking out a year from now, so let's say April 2021, I think we're going to be in a much better place than we are today. So that's I'll leave you with that.
Excellent. And so Danilo, kind of, I mean, a little bit of a leading question here, but if for those of us because I've been listening to just this first 5 minutes, which has been amazing with you, and so I'm thinking, hey, like if someone is not working with financial planner like you, they're making a big mistake. I would just love to kind of hear about a little bit now about you and your background in Gerber Kawasaki and kind of what makes you guys unique in terms of why people should work with you and put their money with you versus doing it themselves.
Sure. Yeah. Thank you, Danny, for that. Nice setup.
Well,
I'll give you the background real quick. Our firm started because of the 2008 financial crisis. My partner and I were already in the industry, and we were right in the middle of the financial crisis, watching it unfold, seeing what happened, and not believing our eyes, not believing that people were that greedy, that stupid, that they put the entire country, maybe even the world economies at risk because of greed. And it really hit us that it was time for us to start our own firm with one main thing in mind: clients first. Okay, not profits, not Gerber Kawasaki, clients first. Your financial interest first. So we register as an RIA, which is a fiduciary standard for investment advisory firms. So we have to do what's in our client's best interest. We decided to be completely independent from product association. So, we don't have any ties to any, products or companies. We don't have proprietary products that we're trying to sell. Our job is really to get to know our clients and put together the best financial plan we can possibly come up with. So the financial crisis gave really birth to Gerber Kawasaki. And then one last thing, which is kind of our, Russ and my idealistic view, is we wanted to democratize financial advice. A lot of people think that to work with a wealth manager, you need to have, $1 million or whatever, 500,000. And at Gerber Kawasaki, we eliminated investment minimums. So basically, we will work with you if you have, a grand. It doesn't matter. What matters to us is where you're going in life. If you're on this trajectory, you're starting your professional career, you went to good school, you got a good job, you don't have a lot of money, but you want to get ahead, we have a Get Invested program for you. If you have an established career, you have a portfolio already, obviously that's what we do. So we created kind of 3 separate programs to cater to all of our clients. We have a wealth building program, a traditional wealth management program, and then we have our ultra high net worth program, which obviously caters to the ultra wealth. But we're very proud of the wealth building program. And in 10 years, actually, interesting enough, May 1st is our 10th year anniversary of Gerber Kawasaki. In 10 years, we have seen clients go from wealth building to wealth management, and a few to ultra high net worth, because their companies hit big, their business got acquired, they moved up in their careers. So it's really satisfying to see that trajectory, and that's really what we're helping our clients achieve over time.
That's awesome, Danilo. Congratulations. And I didn't know it was your 10-year anniversary here coming up. So congrats, man. That's so cool.
Yes. We were planning a big party. Now we're moving it to Zoom.
A Zoom party.
A Zoom party, yeah.
We've been having a lot of those, unfortunately. But we always have wine, so it's fine.
Yeah, those parties, it can get wild too. I think people are just so antsy and eager to interact with other people that any excuse to get together with other people, even if it's online, it's a good one.
Totally. And by the way, you guys, all of Danilo's contact information is going to be down in the description. So if you want to get in touch with him and chat about what he does and what Gerber Kawasaki does, please reach out. Like he said, no matter what your situation, they have a program and a product for you to help you, with your wealth building. So Danilo, let me ask you this. A lot of our audience really is, self-employed, real estate agents, entrepreneurs, business owners, people like that. And what I find, as I coach people like that, is that, a lot of times we're like I always tell real estate agents, we're always 2 commission checks behind. We've already spent the next 2 commission checks, right?
Yeah.
So, what do you say to that segment of the population, especially now, right? Because money is so tight. What advice are you giving kind of people in that position right now, and what do they do?
Yeah, that's a great question, Danny. It's one of our specialties is to work with self-employed business owners. It's a pleasure and a challenge to work with this category of people, mainly because your income is variable. You sell a few houses this month, you don't sell anything for a few months, or you're an actor, you have a gig, a nice gig coming up, and then you can't find a gig for a few months. So discipline is very important for self-employed business owners, and having an established plan. And what I mean by that is every time you make a commission, a fee, you get a check, you gotta do 2 things. One is you have to earmark a percentage for taxes. Okay? Too many self-employed people don't account for taxes. They go out, spend the money, and then April 15 comes, I got to file an extension, I got to pay over time, and that is just a snowball effect. And then the second thing is you got to set up a percentage of what you make for savings. Okay, before you spend anything, you set money aside for taxes, you set money aside for savings. And savings include your retirement savings, it includes your emergency fund, it includes, if you have kids, savings for college. And then you have to learn and adapt and live on the rest of that income. Okay, so you make 100 grand this month, you sold a nice house. That doesn't mean you're going to make 100 grand every month. You know what I mean? You got to understand that. You gotta be realistic. You got to be disciplined about that. So, you figure out at the beginning of the year, what you made last year, average out what you made in the last 3 years, and you can kind of use that as a base. If your business is doing well, maybe you make more, but use that as your base going into the year, and then figure out your budget, right? Your budget is basically broken down into two categories. You have your fixed expenses, you have your variable expenses. Your fixed expenses you can't cut, your mortgage, your insurance, your groceries. Your variable expenses are going out, restaurants, playing golf, movie theaters. So figure out your fixed and variable expenses. And ideally, you want to have at least 6 months of your fixed expenses in an emergency fund. Okay. And this is just a savings account. This is just a money market account. This is not an account that you invest and take risk with. It's just something that it's there in case an emergency happens. Obviously, no one could foresee, coronavirus. But there's always something like that out there. It could be you lose your job. It could be you get sick. It could be you get in a car accident. It could be so many things. We have over 6,000 clients. We see it all. All the things that happen in life. It could be a divorce. It could be, so many things. So, you want to have 6 months set aside for emergencies. And in times like this, that is really the key to surviving. If you have 6 months cushion, even though it's not fun to go through what we're going through, you're going to be okay, right? What I see a lot of people do is, either they don't have a cushion, so when things like this happen, they panic, or they have this cushion, but they see this money sitting there and they see the stock market going up, they go out and buy Apple stock, or they go buy Amazon stock, right? But then when, the market crashes, everything goes down, and now you're forced to sell your Apple stock or your Amazon stock at a much lower price when it's not the right time to sell, right? So you want to make sure that you have the right buckets in place. And the emergency bucket is one that a lot of people don't think much of, but in times like this, it's what's going to save you.
Yeah, Danilo, such great advice there. I do have to challenge you on one thing. I'm sorry. Golf is not a variable expense, my friend. Golf is a fixed expense.
Absolutely. Depending on who you're talking to, that may have to be shifted over to a fixed expense.
So you had that in the wrong category. No, but in all seriousness, Danilo, I actually have an interesting question for you, because I think when something like this happens, a lot of people go, "Oh man, next time I'm going to have the 6 month reserve and I'm going to do it." But then we come out of it and everything goes back to normal, like in, 08, and then you forget about it. So, I'm just curious, how do you guys actually make sure that your clients have this 6 month reserve? Because no one I know can do that, consistently.
Yeah, I'll tell you, there's two types of people, okay, to keep it very simple. Savers and non-savers, okay, or spenders, right? So for the savers, this comes naturally. They're very good at budgeting. They live frugally. They're very good at putting money in the right buckets. Those are our dream clients. We love the savers, right? But unfortunately, a lot of us are spenders. And for the spenders, what we typically do to help them with their emergency fund is we create an emergency fund away from their reach. So instead of leaving in their bank in a savings account that you can go on your phone and transfer money back and forth, they have to go through us to get to that emergency cushion. So, you know, John calls me, hey, you know, I need 30 grand for my emergency fund. We just ask one simple question: what for? Oh, you know, I saw this jet ski, you know, I really want to buy it. So it's a different conversation, right? So for the impulsive client, having to go through us to get to your money is actually a good thing. And, you know, you asked before, you know, why work with a financial advisor? And a lot of times that's one of the main reasons, because we can help you avoid making financial mistakes. Forget about making money, forget about investing in the right things, but just helping you avoid making financial mistakes. I can tell you, Danny, and you know this, you have, you know, a lot of experience as well, how many times clients have come to me with a slam dunk business idea that their cousins brought to them, right? Oh, this restaurant will never fail, or this business, I'll double my money in a year, right? So you know, one of the best things that we do for our clients is be that, you know, sounding board for them, and kind of going through the steps of, you know, let me see the business plan, let's see the viability of success, and let's have an objective conversation about you know, investing in this or that business. So that's a very valuable asset that we bring to our clients in our relationship.
No, that's awesome, Danilo. And, you know, I have to tell you, because obviously, like, you know, I'm a coach and I help people with stuff. I really believe in having this team around you, because we can't be experts in everything. And so, you know, just from our 20 minutes here, you know, of talking together, it's clear to me, like, hey, if you don't have a professional on your team to help you with this stuff, you're going to make a lot of impulsive mistakes, and you're going to spend that reserve like we've probably done many times, because everything looks good, you know, all the time.
Correct. Yeah. And then when you need it, it's not there.
Yeah, no, that's right. That makes sense. Danilo, one question I did get, you know, from social media before our interview that someone wanted me to ask you is, you know, how do financial planners, and like, how does Gerber Kawasaki get paid? I think that's a big thing that people are curious about.
Sure. You know, the industry has shifted a lot, and even in my lifetime, when I started 20 years ago, it was still mostly a transactional based business, right? You sell a stock, you charge a commission, and basically that's how the stockbroker got paid. And that was kind of one of the things that we decided to make a complete 180 shift when we started Gerber Kawasaki. Our firm is mostly fee-based, management fees. So we basically charge a management fee on the assets that we manage. Typical fee is 1%. So on 100,000, it's $1,000 a year that we charge to be your client, for you to be our client, and have access to all these resources that we're discussing today. Our firm doesn't charge an hourly fee if a client wants to talk to us, if a client has a question. I can't tell you how many, you know, one of the main goals we help our clients with is buying a home, right? Mm-hmm. So, you know, we sit down with them based on their budget. We kind of figure out what price range they should be looking at. They meet with a real estate agent, they meet with a real estate broker, a mortgage broker, and we help them, you know, plan to save for a down payment to buy a home and things like that. So it's really important for clients to have that preparation, you know, so they know what they're going into. So I think this is kind of a perfect example for your audience as we talk about real estate. It's one of the biggest purchases you're going to make, and you want to make sure that you've crossed all your T's and dotted your I's to make sure that you're making the right decisions.
Nice, Danilo. Well, that's a great segue into real estate that I was going to ask you about. So we talked about, the stock market, and I'll come back to the stock market and investing because I have some more questions there. But since you mentioned real estate, what are your thoughts on, real estate investment, and what part does that play in your overall plan for your clients?
Sure. When we meet with clients, we take them through a very educational process and explaining things. And we put real estate as the foundation of their financial plan, as in their primary residence. We feel like, it's a great goal to have, to own your own house. Obviously, not everyone should own their own house. It really depends on your situation. You have a great rental at a a cheap rate. Maybe it's one of those units that they can raise the rent on you, rent control. So if you're able to save your money and invest, great. But for most people, the American dream still kind of comes into play, owning your home. So we put that as the foundation of your financial plan. And then, in terms of investing in rental properties and duplexes and things like that, then it's a case by case. A lot of people, and this well too, a lot of people think that buying real estate for passive income is that easy, right? Oh, I'll buy a house, I'll list it, I'll get my rent every month, cash flow positive. It's a beautiful thing. For all of us who own a rental place, we know that it's nothing like that. There's so many things that happen that you need to be present, you need to be involved. But I learned a lot from you too throughout the years. Danny helped me buy not my first house, but my first $1 million place in Rancho Park, Cheviot Hills. That was 2004, Danny.
Yes.
Almost, what is that? Almost 16, 17 years ago.
It's crazy.
But with real estate, location is everything. So, what's going to happen to real estate given this pandemic? Our take is, if you live in a desirable area where demand is more than supply, you're fine. If you live in a more speculative area, lots of supply, lots of new homes, lots of new construction, it's going to be a little tougher for you to for your real estate to appreciate. But that's kind of that in a nutshell.
Yeah, and Danilo, I agree, man. I can't believe it's been so long. You brought up the year there, man.
Yeah, 2004. It was the year
Yeah.
I moved from Orange County to LA, so I remember that.
Mhm.
I was starting my career. I got promoted. I was feeling good, and bought probably a more expensive place than I should have at the time. But I was very happy. I kept it. I kept that condo for over 10 years.
Mhm.
I want to say so. So thank you for that, Danny. It was a great investment.
Of course, Danilo, always a pleasure, and I'm glad
Yeah.
we're connecting here for sure. And I can't agree with you more in terms of real estate. I mean, we go through these cycles, and there was one in '08, and now it's a really interesting one because similar to the stock market, we had such a sharp decline in the number of properties coming on the market and also in selling. But actually, Danilo, I've been doing these weekly market updates now for Southern California on our YouTube channel. And what I'm finding is the last 2 weeks, we've seen like about 35% more properties coming on the market and also selling. So it's almost like we had this month-long pause, and now things are starting to pick up again in terms of activity. So it's cool, but it all comes back to supply demand. Yeah.
Yeah, that's great to hear.
So that's good. All right, Danilo, let's circle back to kind of the stock market. I know so many people are interested in, if I had an interview with a wealth manager and didn't ask about stocks and companies, everyone would probably be really upset with me. So
Sure.
are there any companies or sectors that you're more excited about coming out of this maybe than others that people should be looking at?
Yeah, absolutely. My compliance department doesn't like me talking about stocks specifically, so I'll kind of be a little more broad and talk about sectors. But obviously, healthcare, biotech, and medical supply, medical devices. That's a no-brainer. I think it's a sector that it's always important and kind of goes in and out of favor, but right now it's really in favor. And given the situation we're in, it should be a great sector to be in for the foreseeable future. What we're also seeing, given this pandemic, is kind of a new norm in terms of working remotely, and all the technology tools available, including the platform that we're on right now, Zoom. Companies like Zoom, DocuSign, Slack, they're well positioned to take advantage of a trend that I personally believe will be here to stay. I love going to the office, but I also love the flexibility to be able to work remotely. I still go to the office and get stuff done, but it's pretty amazing how well you can run a business using this technology available. I mean, back in the day, you had to get forms signed, physical forms signed, right? You mail it to the client. It's a big packet. You get it back. Client forgot one signature. You got to send it back. It delays the process. Now, everything is digitally signed. We use DocuSign at our firm, and it works great. So this new tech kind of companies that are well positioned again to gain from this environment that we're in. Companies like Amazon, well positioned to gain from this environment too. Delivery, convenience. On the other side, you have the retailers, right, that are going to go through a hard time. They're already going through a hard time, and this would just kind of add salt to the wound. Hospitality, travel, airlines, they're hurting right now, and most likely for the foreseeable future, I don't see myself taking my family on a trip and getting on a plane and staying at a crowded hotel. I don't think that's going to happen anytime soon. But there's definitely some opportunities. Obviously, talk to a professional before you make any investment decisions. But in analyzing the picture that we're in, those are some of my top picks.
I love it, Danilo. Good stuff. And while we're on it, what about my favorite company in the world, Nike? Talk to me about Nike.
We love Nike. Nike actually reported earnings right in the middle of the pandemic, and they were up. Their numbers were fantastic. Their online business, Nike's a leading company. It's kind of interesting. At my firm, we had a diehard Under Armour fan, and we loved the Nike. He loved Under Armour, and at the time, Under Armour was like climbing up and kind of making a push to be a real competitor to Nike. And then Under Armour made some key mistakes, and their brand just went down the toilet. They lost their appeal, their coolness, and the business suffered. And obviously the company, has done very poorly since. And Nike, on the other hand, invested in their online business, less physical stores, better branding, better message to their, younger generation. And they've done tremendously well. I can't, again, recommend a stock or buy or sell, but it's Nike's a company that we like very much. We feel that's well positioned to survive this pandemic. Fitness, wellness is a category that we like a lot. And I think if anything, people are realizing how important it is to be healthy and to not necessarily, be in shape for the sake of, just being in shape. It's just, being healthy feel good about yourself. And I think, again, Nike is the best company in that business.
Nice. I love it. And I think
Yeah.
I read that, I don't know if you've been watching, but on ESPN, they've been having that documentary about Jordan, The Last Dance.
Oh my God, it's amazing.
It's so good. And I read that Nike sales of Jordan merchandise are up like, 2,000% or something. So
Yeah. If you didn't grow up in the Michael Jordan era, this is a must. I mean,
yeah,
schools should require every kid to watch this thing and take notes and write an essay, because it's, for us who watched this live and saw the greatness of the Chicago Bulls and Michael Jordan, to be able to rewatch this right now, especially during this time, it's amazing. They have amazing footage. And if you want to learn about teamwork, if you want to learn about leadership, right, and hard work and trusting each other, it's been phenomenal. I'm sad it's only 10 episodes. I wish it was like 82. Each game.
totally.
Like yeah.
Yeah, I agree. It's been amazing. Well, Danilo, again, such great advice you've been giving us. I have kind of, one more thing I definitely wanted to touch on, and these have been some questions from our audience coming into our meeting today. How about if we can touch on, maybe our not older, but, slightly older generation, because we've talked about self-employed, maybe younger millennials, stuff like
Sure.
that. How do you advise kind of the older generation of folks that maybe are closer to retirement, or maybe they already are retired and this is hitting right now for them?
Yeah, absolutely. That basically shows the importance of what we call asset allocation. I don't want to get too technical, but when we build someone's portfolio, everything that we do at Gerber Kawasaki is customized to your situation. So no two people have the same exact portfolio, because no two people have the same exact situation in life. So age, risk tolerance, time horizon, all that is taken into consideration when building your portfolio. But the reason I bring this up is because when you are approaching retirement or at retirement, obviously you need to be a little less risky. You can't have all your eggs in one basket. You need to be more diversified. But at the same time, you can't afford to keep all your assets in fixed interest type of instruments, especially in the environment that we're in. Very low interest rate environment, right? Savings accounts pay you nothing, CDs pay you nothing, 10-year treasury bonds pay you 0.6%, so there's very limited options for someone needing to generate income. So you need to create a diversified basket of different securities, including some dividend paying stocks, including some growth stocks, including some, bonds and different types of bonds. So when a situation like this hits, a portion of your portfolio will suffer, will decline in value, but the other portions hopefully can counterbalance the volatility of your portfolio. So overall, your portfolio is not doing the wild swings that we're seeing in the market. And that's really, the analogy I use is, we build a boat for our clients that is able to go through, coast and go fast if the conditions are perfect, but then can, withstand a little hurricane, a storm. It has to hold during those times too, because when you are 70, 75, retired for 10 years, you can't afford to get wiped out. You're not going back to work, right? This is all the money you have. So you got to be conservative. You got to be allocated properly. And that's really the name of the game is asset allocation.
I love it, Danilo. Such good stuff, man. First of all, so appreciate, all this amazing value that you're giving to our audience. And you guys, I will tell you, like, if you've been listening to this, it's just so clear how important it is to have a professional like Danilo on your team. So one question, Danilo, I had for you that I should have probably asked you earlier is, we heard about the fee, which, I think is like, hey, that makes perfect sense, right? You're going to pay a management fee. That's very reasonable. When someone does contact you, which will, again, all that information is going to be down below in the comments. What happens? Like, what's the first step in terms of getting together and getting that plan together for them?
Yeah. Thanks for asking that, Danny. We have a team of 22 licensed advisors, and all of them were hired and trained by our management team. We work together on cases, so it's really a team approach. We actually offer complimentary first consultations. So for any one of your listeners, if you're interested, you're not sure, if you need an advisor, or if you have enough money, call us or reach out to us, and I will pair you up with someone who has an expertise maybe in your industry, maybe in your profession, maybe you speak a different language. We have 9 different languages that we're able to speak in the office. So we'll pair you up with an advisor, and then usually we'll have a 1-hour first consultation, complimentary, and we call that a discovery meeting. Basically, it's an opportunity to discover and learn about each other. And then towards that meeting, we're ready to make you some recommendations. Okay, based on what you shared today, you need this, this, and that. This is how I would start. And then it's up to you. If you like what you hear and you're ready to go, we'll go to step number 2. If not, no harm, no foul. We'll go our separate ways. It didn't cost you anything. So it's a very open, transparent process, and got really nothing to lose.
Fantastic, Danilo. Thanks for that. So you guys, again, that's going to be in the comments below, the description, reach out. I mean, look, guys, like I said, for the 1-hour free consultation, that is amazing. And thank you for offering that to our listeners here, Danilo. So
absolutely.
We've gotten such great value, and you've given us so much good stuff. And now, Danilo, it's really time for the fun stuff, because on this show at the end, I have a lightning round of questions. And so what I'm going to preface this with, the caveat for everyone is, Danilo, I have not given you these questions in advance, right?
Nope. This will come to me as a surprise.
Perfect. So here are the rules of the lightning round. I'm going to ask you some fun questions. And the goal of this, by the way, is for people to really get to know you a little more personally, kind of see what makes you tick and some of the secrets behind your success and personal life.
Boy.
So we'll have some fun with that. Very quick, but the rule is you can say whatever answer you want, first thing that comes to mind. You don't have to explain it. You can just give us the answer and move on. So you ready for the lightning round?
I'm ready.
All right, let's have some fun. First question is, what is your superpower?
Desserts.
Eating them or making them?
Eating desserts. I can eat desserts all day long.
I love it. I saw Nutella is on your list.
Nutella is the top of my list. Yeah.
It's like my kids. My kids love Nutella also. Good stuff. I love it. Okay. When you were a kid, what did you want to be when you grew up?
Firefighter.
Really? I thought you were going to say tennis player.
No, I wanted to be a firefighter, but then I was afraid of heights. It didn't last long.
So tennis was the backup.
Tennis was a backup plan, yes.
I love it. Okay. Danilo, what profession other than your own would you like to attempt?
I had a great experience coaching tennis, high school tennis, right after I graduated from college. It was one of the most rewarding experiences I've had in being able to not just teach people tennis, but having an impact on people's lives, especially at that age that you're kind of lost. You don't know what you're going to do. So I would love to get back to that one day.
I love it. That's something you can definitely do. Very cool.
Yeah.
And what profession would you not like to attempt?
My mom was a physician, doctor, and I, for the longest time, thought I would follow her footsteps. My grandfather was a doctor, and I remember taking this biology class, and I had to dissect a frog. And that was the end of my doctor career.
I love it. Good stuff. Okay. What's your favorite restaurant or type of food?
I love Japanese food. There's a little Japanese restaurant by my house called Moku Sushi. I'll give a shout out to them because they've been open during this pandemic, lunch and dinner. Great people, hardworking people, family owned business in the Palisades. If you live in that area, look it up, Moku Sushi.
Oh, I love it. Funny story. Elena said the other day, she goes, I haven't had sushi in like 2 months. I'm dying for sushi. So they're open for takeout right now?
They're open for takeout, lunch and dinner, which is nice
Nice.
because, a lot of places are open for dinner, but not lunch. Sometimes, my kids love sushi. I highly recommend. They actually have a Thai menu as well. So if you like Thai food, that's also an option.
Cool. We'll look them up and throw them in the description too. And Elena's probably going to want me to go get it for her.
Great. Awesome. They'll be happy.
I love it. Okay, good stuff. Who's your favorite musician or type of music?
Pink Floyd is my favorite band of all times. I love music, Danny. I all kinds of music. I've gone to from Stagecoach to Coachella and Metallica. So I'm a big Pink Floyd fan, though. Actually, the Dark Side of the Moon album, I think debuted it 40 plus years ago today or yesterday, something like that. It's one of my favorite albums of all time.
That's cool. I don't think I've ever listened to that album, and so many people recommend it. I'll check it out. Yeah. So Danilo, that sucks,
put some
man.
Headphones on, music loud. And
Perfect.
Yeah.
And so this must be tough for you because all those festivals are canceled.
It's really difficult. There's a ton of live stream music concerts going on right now, like amazing talent, people. So if you're into music, there's definitely some good options online.
Very interesting. Very cool.
Though,
yeah, not the same, unfortunately, for sure. I love concerts as well, so it's tough. Okay, couple more lightning round questions. This is great, man. Our audience is really getting to know you here, which is really nice. Let's put the pandemic aside. What's your favorite vacation?
It's tough to beat Hawaii. Every time I go, I ask why I don't come there more often. From the vibe, golf, beaches, nature, it's really tough to beat Hawaii.
Yeah, I agree. It's tough. Actually, when this whole thing started, I remember we looked up flights and we were like, let's go to Hawaii. But then we were afraid we'd get stuck there.
Yeah.
Which probably would have happened, unfortunately.
Hopefully soon.
Hopefully soon. All right, Danilo, this is my favorite lightning round question, which is, what car best embodies your personality?
What car? It's hard to say. I actually don't have a car right now.
Really?
Believe it or not. Yeah, I'm in between leases. I'm waiting for my first Tesla.
Ah, okay.
I was never a super Tesla fan. I like the company, the business. I love what they're doing. Idealistically speaking, helping the environment. But I wasn't a big fan of the Model S, the Model X, but I did put a reservation on the Model Y, and obviously everything has been delayed. But so I'll say the Model Y. It's dynamic. It can be a sports car. It can be a family car. It can go fast. It's safe. I think that's kind of my personality. I'm not one-dimensional. Definitely not. So I'll go with Model Y.
I love it. Good stuff. And we got like 2 more questions here. Next one is.
I know it's probably not the answer that you like because I know you're a car buff, and I miss the engine. The reason why I've never had an electric car up to this point is because to me, a car is the engine, right? And there's nothing like turning on your car and hearing that roar. And when you step on it, you get the feedback right away. But I kind of have to get past that for the next few years and see how it goes.
No, I love Teslas. I think they're super cool, and for all the reasons you mentioned. It's funny. My kids said to me one time, they're like, "Hey, Daddy, can we order the Tesla?" Right? And I'm like, "No, it's missing like the feature that I want." And they're like, "What feature? It has everything." And I'm like, "The engine."
Yeah, the Tesla fans, man, they're hardcore, and I've seen they have the engine sound feature on Tesla. So if you're miss that much, that you can have that on your Tesla.
That's right. That's right. No, I like all kinds of cars, but when they make an off-roader, then I'll be in, because I got to
Yeah,
take my Jeep off-roading.
yeah.
So good stuff. That's a great one. Okay, so we got let's see. Actually, last question, last lightning round question. This has been great. So Danilo, what natural gift that you don't have would you most like to possess?
Easy, a golf swing. Uh, you know, just give me a nice golf swing.
I love it. Well, we got to get out. We got to get out there again for sure. And so, Danilo, this has been amazing. Thanks for the lightning round. That was awesome. People will get to know you better and really understand kind of some of the stuff behind you. And so, before we finish the interview here, which has just been fantastic, just want to ask you if there's anything else you want to tell our listeners about maybe what you do and kind of some things that they should know that maybe we haven't talked about yet.
Yeah, I love the analogy to sports, and I grew up playing tennis, competitive tennis, and when stuff happens in life, sometimes you have to go back to the basics and start from scratch. So starting with the basics, do a budget, see where you're spending your money. Create a plan, financial plan. It doesn't have to be 30 years. The next 1 year, maybe 5 years. Okay, where you want to be financially, how much money you want to have, how much money you want to save up, and it really, it's that simple. And then just got to stick with it. And what we help people do is we help people stick with their plans. If it was easy, everybody would be doing. Nobody would be struggling financially, but we all know that that's not the case. So we help you, stay on track, create the plan, hold you accountable, and be a sounding board to your ideas and decisions. So, go back to the basics, figure out what you need to do to get set up correctly, and go from there.
Such great advice, Danilo. So, I just want to thank you so much for being on the show here and for giving such great wisdom and knowledge and value to our listeners. And I know that I'm sure everyone's gotten such good stuff from this interview. Can't thank you enough for this and for what you're doing for all of your clients and for everyone. And again, guys, please reach out to Danilo and his team. All of the contact information will be down below. Grab that 1 hour complimentary consultation, discovery consultation, and get yourself set up financially. It's so important, especially right now. Thanks again, Danilo. Really appreciate your time today.
Yeah, thank you, Danny. I want to say, I've known you for a long time, and you do great work. I'm proud of your achievements as well, and it's been a pleasure to be here with you today.
Thank you so much, Danilo. We'll talk soon.